And I want to show a chart that is it was pre-labeled that I sent out to you. That is a that it shows more of the labeling, but I want to show you the market. This is a chart that I sent to you. Um, it got kind of mixed up the wording wise, but this is a stock called RYDER stock, and um, and it really is a situation to where it's really a market that really is really important. So you see, I did this chart several times, right? So here is where the markets. I don't want to go too back because it's kind of market wise. But what's real key, I'll leave this here for your consumption, and you'll have it. But I really want to take you from the market that explains to you the rest of the story from here. So obviously you have a market that this bar here is resistance here. If we take it, we have a bar that goes right here. This bar here is a wide bar with high volume. It's a wide bar with very high volume right here. Okay. So this high volume bar is stopping volume, right? It's bag holding by the composite operator. So here's your resistance. There's your support. Bag hold is a press to the mat. That's what a press to the mat looks like. A sharp, wide bar down to an area of support. It holds up. Market continues to go higher, form the trading range. Okay. Forms the trading range, go higher. There's no supply. As long as there's no supply here, you're following the trend of the market. Okay. We go up, and then we have some type of break. Normal. Okay. Normal. The question is, do we see supply? No supply. This is long liquidation of the markets. But look how long it takes to do that. 1, 2, 3, 4, 5, 6, 10 bars. The speed of how a market reacts is very, very important. The market then goes up, breaks, the slowness of the break. It goes against an area of support. It forms the spring retest. Just a reaction low before the high. It reacts well, comes back. So the market is not ready to mark up yet. It's the beginning phases of a higher trade range. Nothing here, nothing here. This is a beautiful, beautiful springboard spelled wrong of the market at the creek area. This is a great example of a springboard. And we'll see this. Dips underneath the support, cluster closes, under support, and boom, and closes well, mid-range. The retest. So some people could buy this. Some people wait for the next trade. Boom. Rides it up. Now this is a trading range. Now we form another trading range, don't we? A new higher low and a new higher high. Comes back down here. No supply. Selling long duration, but no supply to the markets. Not going to buy this one. It's entering the LPS area. Comes down here. And then he has a little volume. This is a successful retest. This is your entry. Stop here with cause being built. Vertical absorption. Okay. Market then comes back down. Does not violate any supply, long liquidation, that reverse absorption, right? The reverse absorption, a retest, vertical absorption, jump over the creek, absorption, no supply, comes up, absorption, lack of demand. They were not willing to pay higher. Lack of demand. The market has to go lower to find demand. High volume on the break, effort versus result, does not change the integrity of the chart. Hold up above support with no supply. That's key in up markets. Goes back down here. Retests, no supply. No supply. Forms another higher trading range. At one point, we're going to get stopped out to the downside. But until that day comes, we're buying supports. He has to react. Okay? This bar right here is your get out bar. Why? Because selling is now increasing to the market. Long liquidation. So the last longs you have here are stopped out here with a loss. It doesn't matter. Now what do you expect? Sideways chop. Sideways chop. The market is now in a weakened position because selling is outperforming buying. And we're forming the range. Okay? The market then forms a spring. Now this is an aggressive buy because we have not had really accumulation. We've had sideways. This being an aggressive buy here. Some people want to take that trade. Reverse absorption. These two lows here comes down. A shortening of the downward thrust. Expect a rally. Market then comes up. Here's a very wide range, very high volume bar. Effort versus result. Clearly, effort versus result. Look for the area of support to be long from. Vertical absorption. Here's your spring to buy. You buy that spring, your stop is here. Some type of stopping action. Liquidate your longs and wait and see. Reverse absorption doesn't give you supply, but you cannot be long. You have to wait. I don't know the results yet. Okay? Plays around. Nothing here. Your level of knowledge is poor. A spring coming from weakness. Fails. Failure spring. Now the volume to the downside is heavier than to the upside, indicating selling overcoming demand. And we're looking to sell the market. Okay? And that's how you read charts, right? Look, now you can't get long until you get demand. The red is higher than the green. Go forward. So I want to take you that little journey of RYDER, and I took it longer than what I anticipated, because I was only thinking up to here. But as I was going forward, you could see more Wyckoff. But really, just to understand this chart that was sent, it's really a point to where it's if you go back here and study this chart, it's a great chart. Sometimes we get Wyckoff that's fantastic, and sometimes we get Wyckoff that's kind of sloppy, but we have to be able to read the tape. Reading the tape is always superior because it doesn't put you in a situation where you're necessarily looking for some type of Wyckoff definition, like LPS or something like that, but you're always determined about secondary tests. So it's a quick run through, but you have the scenario, you have it labeled. So any questions, feel free to contact me, okay? So, and we will go back to the chat room and go from there. But I hope you enjoyed this little RYDER definition. It's very important.